Okay, so this one's going to be really exciting. We're going to be talking about trends and trading, how to be early for the next cycle. Well, it's 2026. Meme coins are boomer, InfoFi is dead, and prediction markets are mainstream. So our panel is going to be talking about where the degens and VCs are going to be looking next, and how to stop chasing trends and also start and spot where the next cycle where it starts. So welcome our next panelist. We have Feng from Coinfund, and then we have Erick Pinos from Nibiru. Come on in.
All right, thanks everyone.
All right, all right. Yeah, it's going to be a good talk. I'm looking forward to it.
Yep. Do you want to start with our backgrounds real quick and then jump into the topics?
Yeah, so my name is Erick. I've been in crypto since 2014. I started with mining Bitcoin and Dogecoin in my dorm room until the RA had to shut down the computers for making the dorms too noisy and hot. I was the president of the MIT Bitcoin Club in 2017. I started going to ETHDenvers in 2018. This is my 8th or 9th ETHDenver. And I invested in a lot of crypto projects, and I'm currently at Nibiru, which is a multi-VM layer 1, and Psi, which is a perpstex.
Thanks, Eric. Hey, everyone. Feng. I'm a partner at Coinfund, which is an early-stage VC. We're in our 10th year of business, and I've been there 5 years. We do pre-seed and seed investing up to 5 million, Series A's and beyond up to 10 million and beyond. Prior to Web3, I actually, in case you couldn't tell from the suit jacket, I do come from a TradFi background. I did long-short equities at Citadel and then Point72, but self-red-pilled into crypto in early 17 via the Bitcoin white paper. So I was actually a libertarian with a small L before Wall Street. So Bitcoin was always pretty close to the values that I held in my heart. So yeah, why don't we get into it? I think maybe the first question is we can look retrospectively at 2025. What do you think worked in the year? What was broken? And what do you hope is different about 2026 as we hopefully find our way out of the bear market that we're in?
Yeah, well, I think that, 2025 is definitely the year of the prediction markets and stablecoin. I think that with the heavy institutional interest, right, we've seen more. Crypto has always been very, anti-establishment, but we knew we'd have to grow up sooner or later, right? And I think that this is something that I wanted to, see from how the VCs have kind of approached this, because you guys have invested in projects that have been building these rails for a long time, while a lot of crypto people were just kind of having fun with meme coins and all this. But now it's starting to come to fruition. Now the institutions are starting to get onboarded through those rails that were set up.
Yeah, that's a great point. And Jordan, who spoke before us, actually highlighted one of the unique, attractive elements of crypto. It is fun, but I think we are in this transitory phase where we do have to grow up somewhat as well, in the sense that I think if we want all of our bags to pump, we now need to realize we're in a world where some of the same lens of financial analysis in terms of revenue growth or, God forbid, margins, right, like being profitable, are things we, at least certainly our portcos, feel more pressure to make progress towards. Not even from us. I mean, good VCs aren't every day micromanaging their founders. I think it's more taking a look at how token launches go and the kinds of engagement that Wall Street is targeting in terms of partners, and realizing that there's still more that can be built, or at least we can, as an industry, raise the bar, because otherwise we're kind of screwed and there are no more incremental buyers.
Yeah. Do you think that token launches are still the way to go, or are people moving now more towards equity acquisitions, IPOs?
Yeah, I think the way I mentally model this is it's a pendulum, so it swings from one side to the other in terms of market favoring equity versus tokens. I do think at this very moment in time, based on what we're seeing, equity is favored, but it's only because, if you look backwards the last 6 months, it's kind of been a terrible time for tokens to launch, no matter which exchanges are listed day one. Often you do see a lot of sell pressure as a result of lack of retail enthusiasm. But I think that can change in a heartbeat, whether it's led by Bitcoin finding a bottom, maybe some reversion coming back from people that have been bidding up metals. I wouldn't count tokens out either. I think that would be premature. And you've been in crypto even longer than I think we tend to get max doomer and max pessimistic kind of right before things turn around. So that's my copium, I guess, but we certainly put our money where our mouth is in terms of Coinfund. We're very actively deploying and often historically have found are some of our best investments during a time period where people start writing off the industry or attendance is down or something.
Yeah, I wanted to say that I think that even when it looks like maybe there's no new future narratives in the horizon, there's always something new. There's always something new. In 2018, after Bitcoin had crashed, right from that first initial amount, like tens of thousands, back down to the thousands, people thought it was over. They had moved on from ICOs to go invest in weed stocks and in income share agreements. And it's like, there was nothing left for crypto. There was never going to be anything else for crypto. And then DeFi came out. And it was like, that was like the biggest thing that crypto has seen. So there's always something else. There's always something beyond the horizon. And I do think we'll see a swing back towards tokens. I like the fee switch that projects have been doing, these buyback and burn models. I think it adds a more like modelable, valuation for these projects.
Yeah, absolutely. I mean, there's a logical extreme where you have convergence between equities, however they're kind of custodied or transferred or bought and sold today, and kind of the way that DeFi works or real world assets work on chain today. I think the vision of blockchains and crypto, starting with even Bitcoin, has always been global accessibility, kind of totally permissionless access, and I think that's still very much the end result that I think we're all playing for. The best, most deepest markets for really all assets at any time, whether it's humans or maybe agents, to use another topic du jour, AI agents participating. I think ultimately those price signals should help allocate the scarce resources of whether it's labor or block space or really anything else, time, compute.
Yeah, I guess, speaking of agents, do you think that somebody could make a really good quality VC investable product entirely through vibe coding?
Oh, this is a great question. So speaking as myself, Coinfund's comprised of individuals who have different views. I think the answer is actually yes, maybe. I think certainly for a prototype, we actually are already seeing that be the case. The bar has gone higher for us when we consider what to invest in, because I think I can say that the days of just having a deck and an idea to get funding in real size, I think it's probably in the rearview mirror, and that's probably for the best, because now there's really no excuse whether you use Claude Code or maybe are able to use orchestration software. You really should be able to do some kind of prototyping, mock-ups, maybe even using dummy users to get a sense of how the actual product would work. So I think yes. I mean, I'm open to that. Walking the floors of this conference or earlier this week, I think I see more complete demos or early productization progress being made now thanks to AI. So I think our bar's gone higher. I'm sure customers and users have their bars have also gone higher. So I think it's actually possible. Maybe you need to have a separate, deliberate systems design-based approach for security, but I don't see a reason why a prototype can't be vibe coded for something that can be very big.
And do you think that AI and crypto are very complementary, or are people just trying to like force those two things to work together?
I think both are true. So self-critically, VCs and founders that want VC money, I think, are very good at finding what narratives are hot. In our defense, we actually published our Web3 AI thesis and made our first investment in a decentralized inference and training network called Jensen before ChatGPT was released to the public in 2022. But right now, yes, I think AI is having its continuous moment in the sun, this time in the form of agents and OpenClaw, et cetera. I think we as institutional investors are definitely trained to look beyond the hype. There are certainly founders with good backgrounds asking very high valuations, right now in the market, and I think we're balancing our excitement for what could be in terms of non-human users of blockchain and developing new infrastructure for those use cases, balanced by we've seen hype before. Like we in crypto, myself included, we're very susceptible to getting nerd typed. We see tokens do well and then suddenly want to full port into things. But on behalf of our investors, our LPs, we certainly want to balance that. But I mean personally, I think excitement is almost always a good thing, but we do have a responsibility to convert that into durable technology and not just fleecing people, having people go to jail, rinse and repeat. Because every time that happens, you burn the goodwill of new entrants, people that paid money out of their pocket to come to ETHDenver. And I think we should do better as an industry.
Yeah, I wanted to shift gears a bit to think about privacy projects. So those are also very hot. I have had some issues with privacy projects in the past. Like, for example, one project I really liked was Tornado Cash. And so I had the Torn token, and there was all the memes on Twitter about Torn and being part of this future, which I really liked. And then when Tornado Cash started getting in trouble and all the addresses that ever used Tornado Cash started getting blacklisted, everyone was a Torn holder. We were also just freaking out. We were like, I don't want to get roped into this. So do you think that privacy is an area that's investable, and that's as an institutional level and then also as individuals?
Oh man, this is a really thoughtful question. I think privacy is hard to invest in institutionally, but it's also really important for people to disagree with me and maybe for us to take a stand in certain cases. You mentioned Roman Storm and Tornado Cash, and I mean, some people at Coinfund, we've actually, as individuals, not as the firm, gone to the legal court case kind of hearings and proceedings in New York to support technology that helps perfect freedom and kind of act as a barrier against government overreach. There's actually a pretty core cypherpunk soul to a lot of people, even people wearing suits on stage in crypto, which I love. But I think putting that aside and maybe putting the politics aside from is this a good return on investment potential perspective, privacy has always struggled to be more than a feature and to really be a full product. I mean, we've seen and evaluated layer 2 blockchains that have privacy elements. There are individual products. There are more maybe front-end wallets and other types of applications that also put privacy first. But I think privacy taking off probably has to be embedded into other killer use cases too. But I actually think maybe the subtle corollary is I think there's a Trojan horse element to it where it can be feature in something that is really widely adopted, and then all of a sudden, it's too broadly distributed. Politicians love to enforce, state monopoly on a lot of things, including, surveillance and physical force. But I think if enough of their constituents actually like something and are going to get upset when it's taken away, that's actually when most politicians will maybe drop the issue. So I actually am optimistic about that happening over the long term. But day to day, it's hard to see something be part of a sufficiently useful user experience when they put privacy first. But I know it's a bit of a cop out. But maybe feel free to disagree with me on that.
No, I agree. I think that it is hard to look at privacy tech and be able to invest in it and have it grow to the point where it's without it compromising too much, right? I do think a lot of we talk about this. We talked about this before. The idea that a lot of people are just kind of here to make money and to trade, and so you do kind of have to cater to that a bit, because if you just go with a pure tech solution or a pure privacy solution, that might not draw in as many people's interests, and that goes along with the complaints that people have about how everything is becoming gambling, everything is becoming casinos. So I guess kind of towards the last question, do you think that it's going to stay that way where those ideas are the ones that always get the most attention and the most funding, and that we just kind of have to Trojan horse these ideals that we have into it? Or do you think that people will start to optimize for other vectors besides just how much revenue can the protocol make?
Yeah. Idealistically, I wish more of the market would price in some of these, I think, properties that are really important to freedom, but are hard to quantify. But cynically, maybe, I do think including privacy or other key freedom-preserving features as part of other products is probably the better way to get distribution. But I would love to be proven wrong. And in fact, if anyone in the audience is building something that is, maybe going to disprove what I'm saying, feel free to come find me after. I did want to bring the discussion, Eric, back, with some of the minutes that we have left, to the overall question of how do we maybe help our audience make sure they don't miss the next big secular theme or wave. And I think my advice on that topic is really you should try to get your hands on whatever the experience is you're evaluating. So don't only follow what the the large YouTube accounts or X accounts are saying, but really you should have your own views on a product, because ultimately for something to be successful and valuable, especially in a world where fundamentals matter more, I think it needs users, right? So you shouldn't be afraid to trust your own guts about whether something's fun or not fun or valuable to you for your financial life. So even we as investors, like we love to roll up our sleeves and really get into the user experience ourselves, to have a view beyond what's in the slide decks.
Yeah, I echo this. Like every trend I've been early to has been something that like I've just been doing anyways, and then like the industry like eventually caught up. Like I was doing metaverse land, I was making games for Oculus, and then I just happened to have a lot of sandbox land when Facebook rebranded to Meta, right? And I remember from like my MIT friends, he had so much. One of them, there was the previous president of the club. He had so much Bitcoin, and I'm like, what do you think about the fluctuations? He's like, like. Some days I have a little more, some days I have a little less. But that helps you weather the storm, especially during like bear markets. So just try new things, like whatever is the latest thing that comes out, go give it a try, and then you'll just be at the cutting edge long enough. Money usually comes as a byproduct, especially these things that are like tokenized. Look at that, we made it 20 minutes without talking about prediction markets, without having to resort to that.
Should we talk about it for 90 seconds?
Yeah, let's talk about prediction markets.
Yeah, I mean, I think it's probably a topic that comes up a lot. Short view from our side, we're active investing in this vertical, in applications, building in adjacent areas. I believe in futarchy. Like, I think maybe that's the important point to go out there with. I do think there's a lot of signal in all markets, whether it's information markets or markets for, labor, for compute, et cetera. So I think anything, prediction markets included, that makes it easier for everyone to have access to the same information, to formulate views and have skin in the game. I think that's a net positive. And I actually don't have any caveats to that. I know some people exclude certain types of markets, but I actually think those types of markets are perhaps quite interesting. So we can talk about that offline.
Yeah, and one of the main areas that I'm looking at for the next narrative is prediction markets for insurance. I think prediction markets have proven out the model of being like truth indicators and reputation scoring for elections and politics. I think that could be applied to insurance policies. It could be applied to smart contract safety. It could even be applied. I mean, people are already using it for weather, and like taking out flood insurance by betting on whether or not, there's going to be a flood warnings and stuff. So I think that's one cool area.
Yeah, absolutely. And I think the fact that we're already seeing AI be pretty good at being predictive and really supplying liquidity and views also really helps bring that future into sharper focus quite quickly. And with that, we're out of time. Thank you, everybody. We'll be around if you want to come find us in the back. Thank you.
Bye.